Hey guys, Tony here. I did want to talk about the S&P 500 and just where I think it's headed, what it can do in the next week or so. I want to just be straightforward. I am still bearish on the S&P 500. As long as we are bear months or we are closing bear months on the S&P 500, I am 100% bearish. There's no need, whenever I don't listen to my TA or don't listen to the bias, I end up being on the wrong side of the trade. So yeah, I'm still bearish. I mean, you are seeing weakened signs of bear momentum on the reverse MACD, right, on this last bull cycle that we started September 7th, and on the stochastic on the weekly. So I'm not expecting a recovery yet. Maybe sideways trading between 440 425 or so. So the month bearish, weekly neutral-ish, and the daily right now is bullish. We did see a run from roughly like 430-ish to 438. And it does look like we ended up closing the gap at, 430, like 430, like 440 and stuff on the daily. You have a little bit of a wick up there. You still have like a couple, like maybe like 40 cents of it not closing. So we look closely on that gap fill, right? You can see that there's still a little bit of, of a gap still there between 441.61 and 442.01, right? And if anything, this should actually be a little bit higher. So I don't consider this a gap full. I consider this like a 90% gap full, but gap fill. Usually in a case like this, when it fills like partially, it ends up going on the opposite direction. So you have the gap up here. It only filled at 90%. I can still see a drop off to the low side. I mean, the last forecast we had hit on the second scenario. So first scenario, we actually go up a little bit to 50 MA, touch back down here, and then run to the upside, right? We actually just stayed up here, ran down to like 425, lows of what, like 426.20, so only about $1 off, and then we just kind of traded sideways, right? So that was pretty okay. Let me show you guys my next forecast. Do I have any more? Same thing over here. Forecast 2 hit. I'll delete this for now, but we still have that gap open, right? It didn't fully close. And you actually had another gap created right here between 435 and 438. Let me see if the daily is on there. Yeah, so you have a clear gap created between 435, let me see, 435 and like 438 or so. So as of right now, my sentiment is still bearish because of the monthly and the weekly. There's no reason for me to be bullish right now. You have the 4 hour starting to create tops on the Stoke, and you also have weakened bull momentum. I think what can happen right now is, because the hour is starting to trail down and respecting that bear cycle, I think it's going to play out something like this. We're going to come down, fill the gap at 435, and then possibly run back up to previous resistance of 439. Or if it fills the gap and continues to drop, I think we're going back to 425, 426. I would personally be buying puts right now for the S&P 500. If I get like 2 puts, I'd sell one at 435 and sell the other one, and sell the other one once we hit 425 again, or 426. But you would keep one open just in case it does decide to drop like that. But I think I personally don't think that the SPY is gonna run super hard to the upside. I mean, generally speaking, it likes to go 1, 2, 3 hours and then start recovering again. 1, 2, 3 hours sideways. And right now it's on that 3 hour mark. So it closed on 1, 2, 3 hours. So actually, you might actually see it trade sideways and come back up. I'm a little bit more bearish right now just because the monthly is still bear. So I would expect more of a move, or my play, I'm not going to play the SPY, right? But I would probably buy puts, get out at 435 maybe, and then maybe expect a small rally to the upside. Or, I mean, looking at historical 1 hour patterns, it does look like it likes to, after that 3 hour mark, it does look like it likes to trade sideways. So if anything, I would expect maybe either a gap fill or for price to just kind of trade sideways and then break to the upside. which is what happened every single time back here for the last couple of days. So SPY right now does look bullish on the smaller time frames, but on the higher time frames, it actually looks really, really bearish. And my bias is still bear on the SPY going to the low side. Keep in mind the job report is also going to be released today, which actually started the initial drop off from, you know, all the way from like 450. So that if that job report is bad, you know, expect the SPY to drop. But you know, we gotta wait and see what happens with news, also how the movement actually plays. But like I said, I am longer term, I think, bearish, but I would not be surprised if you see the SPY rip again to the upside, especially look, 30-minute is about to close bullish. So I definitely say that, you know, short term, I can see the SPY ripping to the upside, and then possibly depending on the week and month closes, we can definitely see another drop off. But I think short term, at least for today and tomorrow, well, today and maybe Monday, I would definitely be bullish on the SPY because it does look like it's gonna rip to the upside. But again, I still think it's got to fill the gap. Still bearish on the longer term, depending on where the month and week closes. But short term, it does look like it's gonna run today. So we'll see what happens. See you later, guys.